Hi, everyone. Welcome back to Trace the Trade, the podcast where we unpack how data traceability and technology are reshaping the way the world trades food. So, I'm your host, Athena, and today we are zooming in on a challenge every exporter and trader knows too well, which is slow, uncertain payments and cash flow pressure in global agri food trade. So, joining us today is Bryant Wong, CFOO at Dimuto, and Bryant oversees Dimuto's operations and payment infrastructure, including Dimuto Pay, our invoice factoring solution that leverages real trade data to improve cash flow for exporters and suppliers. So, Bryant, great to have you here. So, to start off, could you please introduce yourself first and what you focus on at Dimuto?
All right, thanks, Athena, for having me on the podcast today. I think just to introduce myself and a little bit about my background. So my name is Bryant. I look after most of the finance and operations functions in Dimuto, primarily making sure that our day-to-day operations run smoothly. Making sure that the trades that we're doing, so payments in, payments out, they're all well looked after, and looking for ways where we can expand our footprint outside of Singapore. So our main markets are actually in the US. So it's really very much about trying to build the business from where we are currently. So I think some of the things that we really want to focus on is on the reason why the Dimuto platform and the technology was built, and how it actually helps to actually alleviate a lot of the problems that we're seeing in the agri-trade industry.
Okay, thank you so much. So, let's get into the questions. So, first, maybe from your perspective, what do you think are the biggest cash flow challenges that exporters and traders face today?
I think traditionally, I think even before I was part of Dimuto, I actually started my career in the timber trade. So for most of the time that I was there, what I saw, even though it's not exactly like for like kind of industry, but I do see a lot of parallels where the payment cycles are very long. So in agri-trade, you would look at maybe 45 to 60 days being like the sort of payment cycles. Whereas in the past, in timber, it could be up to 6 months. So a lot of the suppliers in the various industries face cash flow crunches. And as we know, there are many natural disasters, there are many political challenges that might just come up from time to time. And these, things exacerbate a lot of the delays. So when it comes to this, we realize a lot of the farmers and a lot of the suppliers at the packing house level, they face a lot of difficulty because their aim is actually to move as much product as possible, but they're often constrained in the cash flow that they have because I think they're the epitome of living from paycheck to paycheck. So whatever money they have, they need to pour it back into the business and to grow the business. So it's pretty much the cash flow crunch that is actually holding back a lot of the suppliers that we are working with.
Yeah. Okay. So, you mentioned like the difficulties of moving cash flow. So, why would you say it's very difficult? Because from the outside, it can seem like the payments are just slow for no reason.
Okay, so I think at every step of the way, as a farmer or a supplier selling to maybe like the distributor, there is already a cash flow, you know, difference of like 30 to 45 days. And from the distributor going up to the end customer, there will be another layer. So oftentimes it will be waiting for the supermarkets to pay the distributor will pay to the supplier, and then the supplier has money to actually pour it back into the business. So I think that's one of the problems that we are seeing. Secondly, is that we do recognize that there is a very high level of mistrust or a lack of trust in the industry that we are working in, because oftentimes, there's no visibility or there's no way to know what was packed and what was sent from the supplier or the packing house to the customer. So oftentimes you would only be able to know what was packed when you open up the container and you do a sort of like maybe a post-shipment inspection. So a lot of these take a lot of time. So things that would add even more time would be if during the post-shipment inspections there were problems that would result in claims and disputes, that would actually cause even longer payment cycles. So I think at the core, the main problem is really the lack of visibility that leads to a lack of trust, that leads to all the delays in the payments. Yeah.
Okay. Okay, thank you for sharing. So maybe now we can talk more about Dimuto Pay. So could you please share what it is and how does it address this cash flow problem? And maybe you can explain it in practical terms, like what changes for an exporter once Dimuto Pay is in place for them.
Okay. So I think that traditional invoice financing, invoice factoring arrangements are very, very, very commonplace. However, from the examples that I've seen or the partners that we have engaged with who are actually offering invoice factoring businesses or invoice factoring facilities, we do see that it's basically, you know, one platform that I saw is basically you just upload a copy of the invoice, a copy of like the bill of lading or the airway bill, and once they do the checks they have on the back end, within 48 hours they're actually able to disperse the money. So this does not actually um, help much in terms of the visibility, because the underlying problem still stays where there is a lack of visibility. You don't know whether this invoice was really for something that is being shipped, or it could be something like this invoice could have been given to different invoice factoring companies and they could have over leveraged the financing. So fundamentally it does not help the invoice factoring companies because they are still exposed to a whole range of different kind of risks, especially on the credit risk. So where we have identified based on what we've built is that the platform and the technology where we are able to trace, the a single down to the level of a single box of maybe mangoes or avocados, you'll be able to see for real what was scanned, what was packed, what was up, was loaded onto the containers, what was shipped out. So you'll be able to back it. So you're actually seeing that the lending is asset based or asset backed, and because all our information is recorded on the blockchain, so it's not something that you could just delete or remove the information. So everything gets stored in black and white. You're able to see the audit trail. You'll be able to see things like what was done at pre-shipment inspection level, what was done at the goods received post-shipment kind of inspection level. So we are able to, in a sense, de-risk a lending kind of arrangement. We'll be able to give the comfort. So we have also added on things like the possibility of having it backed by trade credit insurance or invoice factoring kind of related kind of insurances as well. So all of these we are building up towards something where we can provide a certain level of comfort.
Okay, thank you so much for that answer. So maybe we can talk about what practical differences does this make for these exporters that start to use Dimuto Pay?
Okay, so I think at its core, what Dimuto Pay actually helps is that once everything relating to the trade has been uploaded or updated into our platform, we will be able to score each individual trade using our trade risk algorithm. All right. So once everything is in order, okay, we will be able to process the disbursement within, I would say 48 hours, so 2 days. So what this helps is that instead of having to wait the 45 or 60 days for customers to be paying the supplier, Dimuto will actually step in, and with this risk managed, we are able to give the confidence to actually pay the supplier upfront. So we are helping the supplier as well as the end buyer. So suppliers, they get earlier cash flow, better cash flow. They can put the money in to actually service other or bigger orders. And on the sort of the buyer's end, they are actually helped by, okay, they don't need to pay earlier. They are actually having the extra visibility into what is being sold to them. So one other very practical thing that comes out from this is that because the customers or the buyers that we are working with, we tend to focus a lot more on the very bigger buyers. So like Robinson Fresh, like maybe Mission Produce. So the amount that they are buying is actually huge. So they are not only serviced by one supplier. So once they are actually comfortable with us, providing such invoice factoring services to their supplier, we are able to extend or expand it to the other suppliers that they have. So it's not only helping the other suppliers with cash flow, but it's also bringing them on board into the Dimuto ecosystem. And all the suppliers that are actually supplying to maybe like Robinson Fresh, they are able to see everything on the platform before they actually receive it.
Okay. So you mentioned a lot about data. So it seems to be a very data-driven process. So can you explain how this data helps reduce like the problems like disputes and payment friction, especially since this industry um, has a lot of like disagreements over quality and things like that. Yeah.
Yeah. So we here in Dimuto, we do feel very strongly about data. We feel that because I think in the agriculture industry, even till today, since hundreds and thousands of years ago, the industry hasn't really changed a lot. If you go down to the farms in parts of Indonesia or even in like Mexico, you would still see that they are pretty low tech on the farm level. They are actually doing a lot of the recording on pen and paper. So when it comes to things like disputes, I mean, the farmers or the suppliers, they are low tech. So, but the guys that they're selling to, they know their stuff. So when it comes to dispute, oftentimes the farmers have little or no power to actually justify, because everything was on pen and paper. There's no visibility. There's no way to trace what was actually sold. So for us, it's really about being able to show what was packed in what sort of quality. So in the case of some of the product categories that we work with, like avocados, we actually use AI to judge the product quality levels of each and every maybe carton box of avocados. So when in the case that it's shipped and we've taken the picture and it's shipped to the customer, if there are any issues, we are able to take out the exact picture of the box that they are having an issue with, and we can actually show them, that what was packed was perfect. Okay, and we are able to actually drill down and identify, at which step of the way was there a problem. So, it could have been in the case of a container ship of avocados from Mexico to, for example, Singapore. We are able to track, the delays, how much time was how much time elapsed, during the journey, any temperature changes. So we could actually identify where the problems are, and we are actually able to pinpoint where and which step of the way, there was an issue. So, in the case of a dispute, all our documents are all on the platform. The audit trail is all on the platform. Okay, so what would have taken a couple of teams, different teams, to actually come together to gather the information, to do the investigation, and that would have taken weeks or even months to come to a resolution. We are on platform, it makes it a lot more easy to actually gather the information on the Dimuto platform. So it actually cuts disputes from weeks and months to days.
Okay, so let's move on to the bigger picture. So as Dimuto scales globally, how do you see invoice factoring evolving on this platform?
I think in terms of this, the for Dimuto, I think the bread and butter would still be trading of the different product categories that Dimuto is very strong in. Namely maybe like the mangoes from Peru, the avocados from Mexico, the dry vegetables from Mexico to the US. So we see invoice factoring as a way for us to expand further on our market footprint. It allows, because not everybody would be wanting to sell through Dimuto, I would say. There will be the companies or the suppliers that need some sort of like cash flow help. So we see it as just an extension of what we would do on a regular basis. And it's just something that comes to us very naturally because the platform that we've built is very robust. We are able to use the data that we are accumulating to actually, guide users to make very informed decisions. We rely very heavily on AI and automation. So we see invoice factoring being something that adds to the bottom line. And it allows us to make use of the data that we are collecting in a very value-added kind of sense. And it allows us to actually expand on the business.
Okay. So for our last question, maybe for the viewers out there, what advice would you give to them who are still, reluctant to try this new technology, who are still relying on traditional payment cycles, and they're hesitant to adapt this system? So how can they get on the Dimuto ecosystem?
I think oftentimes when we talk to new suppliers or new partners, the common acknowledgement is that of many of the suppliers and farmers are, in a sense, technophobic. They don't see the benefit because to them, what they've been doing has been working in a sense for hundreds of years. So they don't really, they can't grasp the true value of actually adopting technology. So oftentimes, even if they are selling at 10% sort of markup, when it comes to claims, if there is a 10% claim, it just totally erodes, any profit they would have. So they're just stuck in this really vicious cycle. So the advice is probably for, anybody who's interested to really come on board, test out the platform, test out the way the trades are structured, do it with one or two trades that they have and really compare it against what they traditionally would do, and see whether it really helps. Does the platform really help in reducing the claims that they are facing? Does eventually also the opportunity to make use of the invoice factoring service, does it help them alleviate with their cash flow issues? So I think it's really about taking the really daring to take the first step and to see and experience the benefits. It might not increase their profit margins, but we are protecting their profit margins from the claims. So it really helps them in a way where they can actually step out of the vicious cycle, I would say.
Okay. So we've come to the end of the episode. So Brian, thank you again for breaking this down very clearly. So from what I understand, I think what really stands out is how Dimuto Pay turns something that exporters already do, which is trading, into a more predictable and data-backed way to improve cash flow. So this is a great example of how invoice factoring, when it's paired with real trade data, can turn visibility into velocity and help exporters move faster and plan their trades with confidence. So again, to our listeners, thank you for tuning in. So please stay with us for more episodes of Trace to Trade, where we continue to explore how commerce is transforming the global agri-trade. And this is brought to you by Dimuto. Thank you very much.
Thank you.